Hey everybody, it is Friday, the 9th day of November 2018, and this is Brian Shannon from AlphaTrends.net speaking. We had a bounce back for the most part this week, although we lost some ground in here today. Only the semiconductors and the biotechs were lower on the week. Well, I guess oil was as well, and of course the volatility index. But as far as equities go, the S&P gained back 2.2%, Nasdaq 1.2%. And let's take a look at the charts and make some sense of it all. The daily chart of the S&P 500, we came almost exactly to the 61.8% retracement of this high to this low. You can see that that 61.8% retracement came in right here, and that's also where we had prior resistance as well. Just above, we also have the declining 50-day moving average. The just below us, we of course have the year-to-date volume-weighted average price, which is kind of clustered together with all of these important highs and lows from earlier in this year as well. So I think if we see further pullback next week, that it's likely that this is going to be our important level, 276 down to 274. And now that we have that 20-day moving average rising once again, it tells us that we're still in a position where there's a lot of uncertainty as far as where this market wants to go on a longer term basis. The weekly time frame, we broke that big uptrend line, and now we're stuck here in this area where we're going to see if we have another situation like this where we chop sideways and frustrate people for a while, or if we see another leg lower. There's not a single person out there who can tell you what will happen in the market. If you do find someone who tells you what will happen, run from them because they don't know what they're talking about. But we can prepare ourselves by knowing the key levels. This afternoon on Twitter, I had pointed out right at this exact point where the S&P 500 was meeting the volume weighted average price from last Friday's low, and that was also the 5-day moving average. Those levels were important for a couple of reasons. One, we had on this 30-minute time frame, of course, the volume weighted average price from the low that was made last month, and then that was touched at the 5-day moving average right here. And so we drew another volume weighted average price off of that, and that's where we touched with the 5-day moving average today. We then saw that this market continued right up to the volume weighted average price from the peak this week. That is the 2-day volume weighted average price. So if you know the key levels, you can make moves in between them. Right now, we see that the level of ascent is slowing down a little bit, and it's possible that we see further pullback. And this volume weighted average price from the low is further reason to think that down towards 274 is a possible area where we might encounter support if this market does pull back a little bit further. For the Nasdaq, we have a little bit different story here. We broke below what was looking like it might become support here on the intraday time frame. That is the 30-minute time frame. We are still well above the volume weighted average price from the low, and that will be an important level to watch next week as far as about 168.5 goes. If we break below that and hold below that, then I think you've got to really become much more defensive. We closed below the 200-day moving average, below the volume weighted average price from this peak over here as well. So just a lot of indecision, and it tells us that this market needs time to heal from a bigger term perspective. And that means you either need to stay on the sidelines in cash or switch to a shorter term time frame where it makes more sense. The Russell 2000 pulled back a little bit here. We're still above the volume weighted average price from the low, but below the 50 and 200-day moving average. You're looking at a weekly time frame. It looks broken here. We haven't been below this 200-day moving average like this, that 40-week that is, since back in here. And you can see the last time we had a fearful sell-off below it, we had rallies up to the 200-day or 40-week moving average, and then we saw the market have that next leg lower. So markets don't have to fall apart all at once. And one stock that a lot of people talk about, and I had pointed this out on Twitter, only as an example of here's how to handle, how to look at a stock. And unfortunately, it's not showing up very well here. Go to Alpha Trends on Twitter, and you can see this is General Electric for the last year and a half. And look at these bounces on the way down. And the stock still closed at a all-time, not all-time, but new closing low for this move. And that means that, guilty till proven innocent. When you see all these longer term moving averages turning lower, don't trust the rally attempts. Don't trust them in the Russell 2000. Don't trust them in the Nasdaq, and don't trust them in the S&P. Now, maybe this market can turn around, but it occurs a little bit at a time, and that's why I was pointing out also that maybe we have an inverted head and shoulders pattern forming in here. We're looking at 130-minute data right now, meaning 3 candles per day. This could be a shoulder, a head, and a shoulder. If the market is going to stage a recovery from here, well, here's the neckline, and maybe it can continue higher. Right now, we just have to be cautious. If you take a strong stance in either direction, whatever you do, just be sure that you have a place to control your losses. Stop losses will get you out, on weakness, but they will save you from further weakness, hopefully. Biotech, as we mentioned, this group was down a little bit here this week. For some reason, my chart was taking a little bit of time to load there. But here's the volume weighted average price from the recent low. We closed above that, but we do have a 5-day moving average that's flattening out. So the bearish scenario in the biotechs would be something like this. If they rally up towards this level, come back down, something like this, and then break lower next week, that's what you have to be aware of. If you're looking to sell short, don't sell short, on a quick move lower. Wait for it to make a lower high below a flat to declining 5-day moving average. On the daily time frame, it came right up into the area we're supposed to find resistance. That is the 200-day moving average and the year-to-date VWAP. So you have to be very careful in here. On the flip side, maybe this is forming an inverted head and shoulders pattern. Nobody knows, but look at the momentum recently. It's lower in the biotechs, saying that the odds favor the downside. So if you're going to short it, have your stop to protect yourself if it rallies further. Same is true for the financials. They came right up to the declining 50-day moving average. The volume weighted average price off this peak we're holding above, and we're also above the VWAP from the low. So we have mixed messages. Is it time to get aggressively short on the financials? No, because we have a rising 5-day moving average and we have higher highs and higher lows above that. The energy names, these guys are a little bit more vulnerable. Now, we came down and tested the volume weighted average price from this low here today on the open and recovered. We're below a 5-day moving average, which will start to decline, probably into Tuesday of next week if it doesn't make much more upside progress. That is, if the XLF doesn't. But we came down pretty hard. We got a bounce. Now we're going to see, is this market going to form a higher low and bounce from here? Or is it going to continue lower? What's your time frame? Where do you make your trades and measure your risk from? Next week, NVIDIA has earnings. That it looks like it's in a very interesting spot because on the weekly time frame, it's a broken chart. We're below, this is as broken as it's been in several years. Now, can it bounce and continue to move forward? That's up for the market to decide. But we broke down hard. We're below the volume weighted average price from that peak. Now, if we look at a 30-minute time frame and say, what about the volume weighted average price from the low? Well, we're pretty much right at it. We have a declining 5-day moving average, but there's a catalyst coming next week, and that's November 15th. That's when earnings are due. So either way, if you're long NVIDIA and they get a great number, maybe sell some into that strength if if it starts to find resistance up near this area. This is where it could bounce to the year-to-date VWAP, the 200-day moving average, the declining 50-day moving average. If you're one to bet on earnings, that might be a bet. I'm not an earnings better. I look for patterns. As I showed on Twitter, this NIU makes electric scooters, and this is a daily chart. They came public at $9 per share this year, and so far, it's holding. We had a washout. It's holding above the year to date or VWAP since the IPO, but it needs to clear resistance at a minimum this downtrend line, but really needs to get above this level before it can be considered for a long side purchase. I also wanted to point out EWW. This is the Mexico index. And Mexico made a new multi-year low this afternoon. It broke below that low from 2017. And here's the point. Look where it's come from before you decide to short. I talk about this all the time, in the financials, in all of these different groups, that if it expended a lot of energy on the way down, be very careful. If we drill down from the weekly time frame to the daily time frame, you can see that in the last 2.5 days, it dropped from 46 and then undercut that low from 2017. And once it reversed back up through there on the 5-minute time frame, it shows you've got to be quick. and don't sell short after a decline like this because it makes a new low from 2017. This is about the new low from 2017 low. Look at how much energy it had expended coming into that. The shorts in that area were basically late and they got squeezed pretty hard and pretty darn quickly here. So regardless of what your time frame is, what trade, stocks or markets you're trading, risk management is always job number one.